Net. It is my pleasure, as always, to welcome in my first guest this morning, Peter Costa, former governor on the New York Stock Exchange and market analyst with CNBC. Kind of looks like he's coming to us from a witness protection program there with the lighting this morning on beautiful and lovely Long Island. Hello, Peter.
Good morning, Richard. I just don't know how to correct the lighting in this room. And you know what? I'm in this room and it's bright as can be, but yet the way that the camera or whatever, I mean, I don't know.
I'm just giving you a hard time. We're just going to get you a ring light, like one of those selfie lights that goes with you that brightens up your face.
I would, if you paid me, I would. But right now, money's tight. So we're just going to have to go with the incandescent bulb that I have in my lamp.
It is all right. Great to be with you. Great to see you. We've heard it said a number of times, probably more times that we can count, that the market and the economy are not the same thing. This raging market that we've had for seemingly years, certainly for months, seems to be cooling just a little bit over the last couple of weeks. Is there a direct correlation in your mind between what the market is doing right now and the economy, or, as we've been told, are those two very different things?
Well, they are two different things, but there is an interconnectivity between the economy and the market. I mean, you have to be realistic about it. But what we've seen up until probably 3 weeks ago was a real large disconnect between the market and the economy. The economy was doing okay. I'd say that we're in a good spot. I mean, there are some problems, but there was always problems in the economy. But the market was not reacting like that. The market was reacting like we were in a full-blown, who knows? I mean, post-Trump bump or whatever. And it's been led by maybe 15 or 20 stocks. So to me, we had a market that was probably overvalued. And I think I've said this to you before. I felt the market was overvalued. And I still think it is, even though we've come back a little bit. But you've got a lot of money invested in 7 or 8 major stocks and maybe 10 not major stocks. And there's a tremendous amount of money on the table right now, relying on earnings and relying on the story that's going to continue. And that story is AI. And I think that some of that story is kind of overblown. Only right now, in 10 years, it won't be. But right now, I think the amount of money that's been thrown in investment and infrastructure and whatnot it's out of control. And I think that people are investing thinking that this money is going to have a 7 to 10% return on it. And I'm not sure how anybody could see that. I just don't see it happen.
So, and this is not, I guess there's probably some disclaimer about investment advice. You got to do that at your own risk. But Peter's been in this world for a long time. And I'm curious, when you look at these AI stocks in particular, whether we're talking about chip makers or AI companies or companies that have AI subsets to what they're doing, whether it's through data centers or otherwise, are these still good investments? Are they good long-term plays, or are you steering clear of that?
Well, no, I think that, me personally, I think that if you're going to invest in the AI play, infrastructures are, everyone thinks that's where the money should go. But in reality, I think there's lower risk if you invest in companies that are creating software for AI. I mean, okay. It's the infrastructure on that is just human. It's a human element, and having the ability to program and build platforms that are going to take advantage of AI and what it can offer. I think that's a little safer bet, only because of the initial and ongoing cost. Whereas like a Google spend, 150 or $200 billion building out, data centers and the infrastructure that goes around that. I'm not sure, I think Google's a great business and I love them and I have them in my portfolio and I'll never sell them. But I think that they swallowed some of the Kool-Aid there. And I think that might end up hurting them at some point. Thankfully, that company, Google especially, as far as I'm concerned, has a very strong revenue stream outside of anything to do with AI. So to me, I think they can weather the storm going forward. I think Microsoft was another company that can weather the storm going forward, but there aren't that many companies that have that kind of cash flow that can sustain the cost and then get the benefits of it down the road. So you have to be very selective.
Peter, I don't know that we've ever seen a company that is so inextricably tied to its founder and its leader as we do with Tesla and its relationship with Elon Musk. Maybe Apple, when Steve Jobs was running the company, there was kind of that type of relationship. But I think in the time since Steve Jobs' death, we've seen that there was more to it than just Steve Jobs, and they've been able to move forward and continue to grow. So this is all kind of tied together, and I guess I'm throwing a lot at you here. The debate and the recent shareholder vote about the compensation package for Elon Musk over time, which is obscene on the surface, and maybe when you dig a little deeper, you're like, well, if he delivers on the promises that he's making, then everybody's going to win. Are you a fan of Tesla and I guess SpaceX to a certain degree as well with Musk running that, or does it concern you that there's one guy that seems to be the driving force behind the whole thing?
Well, it always concerns me when there's one person that is so integral to a business because not that I wish anything harmful on Elon Musk, but you never know. I mean, what happens to Tesla if something happens to Elon Musk? That's always going to be a concern. But as far as like what Musk has done and the companies that he's running, to me, the guy is a genius. I think he's a little odd, but most geniuses are odd. And he's putting people into space, and he's putting satellites into space, and NASA, with all the government money that God has given them, they couldn't do this, and this guy has went out and done it. So to me, I don't know about the pay package, but I mean, you really think about it. I think he has to hit like an $8 trillion market cap to start receiving any of that money, which, I mean, it'll happen. I just don't know if it's going to happen in the next 10 years. It is obscene. To me, I don't know why he'd even want it. What is the point? I mean, once after your first trillion, what do you do? I mean, what do you do? I just don't get it. But you know what? He's got he's a genius, and he also has a huge ego. So I guess that's part of it. But I give him credit for everything he's done. I'm not a big fan of Tesla because I think they had their advantage for, maybe 4 years of just having the technology and having the infrastructure to build out all these cars. But I think the rest of the world is catching up, and the Chinese definitely are catching up. So I don't think their advantage is going to be that much longer.
Is Tesla still a car company, or is it something else now in your mind?
Well, I mean, it still produces. I mean, it produces over 1 million cars a year. So you know what? It's still a car company. And what they have proven though is that they can make it. They can make electric cars and they can make them profitable. Which obviously, if you've seen what happened with Ford, they have a Ford Lightning, which is supposed to be the greatest truck that was ever built in mankind's history, and they couldn't get them off the. They couldn't get them off the showroom floor. So yeah, you couldn't give them away. So he's created a market and he's created a quality product, and he has still some runway with that. But I think a lot of the electric vehicle, the rush to EVs is kind of over. I mean, people are going to be buying them because they like them, but I don't think you're going to get that many more converts. I had an electric car, I loved it, but I'd rather give the Saudis my money than give my electric company the money. So I have a big truck, and I like my big truck, right? And I'm going to keep with my big truck.
On the other side of the break, let's transition the conversation to energy. You mentioned the Saudis. Oil right now trading at about $60 a barrel. That is not a trading point that encourages offshore drilling domestically. and it is a spot where it causes the Saudis to not have quite as big a checkbook for some of the investment that they have promised in the United States. So let's pick up the conversation there on the other side of this break. Peter Costa is my guest, former market analyst with CNBC. He was also a governor on the New York Stock Exchange. I want to remind you quickly that coming up tomorrow, SuperTalk Mississippi will be at Scruggs Farm, Lawn, and Garden in Saltillo, gearing up for Super Santa. That's this coming Saturday, November 22nd, with holiday specials on clothing, sporting goods, feed, and John Deere equipment. Scruggs Farm, Lawn, and Garden, 3575 Tom Watson Drive in Saltillo. You've got it locked into Mornings with Richard Cross on SuperTalk Mississippi. More with Peter Costa after this short break. For Peter Costa, it is not a semi-charmed life. It is a fully charmed life. He is my guest this morning. Mornings with Richard Cross, SuperTalk Mississippi, former market analyst with CNBC. Probably saw him on television for years and years. If you were a regular with CNBC, also a governor on the New York Stock Exchange. All right, to set us up for this conversation, I would like to take you to the great philosopher Monty Miller. If you don't recognize that name, maybe you didn't watch season 1 of Landman. It was a Paramount Plus production. Season 2 just began. This was in a boardroom full of oil executives.
I care that the price of oil stays between $76 and $88 a barrel. That is what we should be discussing.
I'm not going to play any more of that because it gets explicit very quickly with some of his other language in there. But a sweet spot for the price of oil, and the idea was as long as it's not too high or it's not too low, then the oil industry can make a profit and it can just kind of move on in perpetuity and create a stable market. Oil right now trading at about $60 a barrel. I think sometimes we don't really know what that means. There was a report that I was reading yesterday, the Wall Street Journal, about Saudi Arabia. And for them to balance their budget as a country, not that they're broke, but they need oil to be at about $92 a barrel. What does the price of oil have to do with energy as we look at it in the broader scope right now?
Well, first off, if you think about the Saudis, and this is just something I'm going to throw out there, and I've thought about this a lot, and I'll answer your question. The Saudis say they need oil around $92 a barrel. I think 90 to 92. Right now it's at 60. So every barrel they're pumping out of the ground, they're not making any money on it. And what they have to do, because the Saudi Sovereign Wealth Fund has the bulk of the cash that they haven't spent, which is vested in U.S. equities and European equities. So if they need to start raising cash to continue the massive infrastructure projects they have going on, they're going to be selling stocks. So you always have to keep that in mind. The same thing happens with the Norwegian Sovereign Wealth Fund, same thing. They don't have that problem, though, because their needs are a lot less than the Saudis. So with that in mind, the amount of oil that's being pumped out of the ground is, if you look at it, we're pumping a little bit more than we have been historically in the U.S. The U.S., number is not $75 a barrel. I don't know where he came up with that. It's around $70 a barrel. The Canadians is $68. Venezuelan, if they ever pumped any oil, was about 62. So, it's right now we're at probably the lowest price, or one of the lowest prices we've been at in over 5 years. So this is good for the consumer, but as far as the oil industry, it's not good. They're not going to be losing money, but they're not going to be making massive profits, which for an extended period of time ends up costing is much bigger than just not making profits. It's now cutting back on exploration, building new facilities, new oil tankers, you name it. This can have very long-term effects if it stays at this level. And I don't know what the price of oil in Mississippi, price of gas is in Mississippi, but in New York, it really hasn't gone down that much. I mean, for the last year, it's been around $2.90 to $3.09 a gallon for regular gas. It's still there. And then the price of oil has gone down 20%. So to me, I think that there's definitely a disconnect between the price of gas and the price of oil. But as far as like the energy market, this is, I don't think we're going to be in this for very long. I think the Saudis will end up, and OPEC Plus will end up cutting production instead of increasing production like they have. And, if the Chinese, who are the biggest users of oil in the world, if their economy starts turning a little bit better, then the demand will be up again and prices will rise. So I don't think this is going to be a long-term situation.
When I hear you
the economy.
describe that, just when I hear you describe that, Peter, it's this reminder that even though we have divergent interest, we are truly a global economy, not just the United States sitting out here on an island all by itself.
Yeah. No, I mean, we trade and we import, probably 3 or 4 times what we export. So we are a major supplier of U.S. dollars to countries that actually need U.S. dollars. And, the demand, with the oil market, and this is something I've gone to colleges and lectured on, it's the simplest market in all the world. Every economy, everything you ever talk about, the oil market is the perfect example of supply and demand. If they're ever going to have an economics 101, oil market is the perfect example. Demand is up, price goes up. Demand is down, price goes down. It's very, very simple. The only time that there's a disconnect is when there is a global geopolitical event that causes a
15
short-term
seconds left.
bump. Okay, causes a short-term bump in prices, and usually that's just speculation. So, we're in a good spot for us, but it doesn't seem to be, really helping all that much as far as, the individual. But we will see it eventually.
Peter Costa, always appreciate the time. Great conversation, my friend.
Thank you.
8 o'clock hour on the way. It's Mornings with Richard Cross. News is next.